India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Tuesday morning, we're coming to you live as always from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Survi. Guys, hi, good morning.
Hi, morning. So, second day of the week. The week started off on a pretty decent note.
Yeah.
And I guess the bulls will really hope they can kind of build on. We don't have too many bad global cues, actually. It's the world's a pretty settled place this morning, right?
Well, that's right. And the key constituent performed yesterday, the Nifty bank. So, hopefully that continues its good performance.
I mean, oil is down. US equities are higher. Bond markets were out of the picture. So, I think it's not a bad sort of backdrop. It's not been a bad backdrop. And, that's the point. You could have there are lots of reasons to be slightly held back as far as India is concerned, and those reasons are perfectly valid. But the fact is, local flows have been strong, and globally, US is doing well. China incrementally is expected to do well. So those are the two big drivers for global growth, and they're looking just fine, even as we run into a bunch of events like elections, etc. But let's talk day to day. And tell you what you need to know. So, US equity markets, another new high, all-time high, and Nasdaq was up about 0.8, S&P was up 0.77. So it's a new record high, and on the S&P, you're looking at what, 6,000 by the end of the year? We'll see. But it's been a pretty strong run. US bond markets were shut, so no cues out of there. In terms of yields, etc. Oil prices are the other big change, which I think stand out. 3% cut, and this is on the back of some perceived reduction in geopolitical risk. So this is a Washington Post news report, which essentially says, without sort of naming sources or who their sources are or who they spoke with, basically it says that Israeli Prime Minister Benjamin Netanyahu spoke with the Biden administration officials, and he said that they will strike Iran, which of course they promised to do, but they will they'll avoid striking Iranian oil and nuclear facilities and concentrate on military targets. So this is, I think, what has taken that 3% out of oil prices. Remember, a lot of the oil premium, the rise that we had seen was built on the assumption, of course, first, the promise of retaliation that is coming, and of course, fears. And there were some news reports earlier which suggested that they may actually consider striking some of these oil facilities or even some of the nuclear facilities, etc. So this is, I think, the news item which has driven the price of oil lower. Dollar index was slightly higher. We're at about 103.2. So at the margin, slightly negative in that sense. But we saw a nice breakout yesterday, and I think that's a starting point. So we finally managed to have a decent close above the 40-hourly exponential average on the Nifty. And that kind of gives, at least in the very near term, upper hand to the bulls. So now we're looking at retracement targets, 25,485, which is the 50% retracement of the entire fall, and 25,672, which is the 61.8%. So if these levels hold, if the short-term, very short-term averages hold, you're essentially looking at a slow rise all the way to these. Bank Nifty also closed decisively above the 40-hourly exponential, and it managed to take out the previous high as well. Here again, 50 and the 61.8% retracements. The numbers don't change. 52,330 and then 52,835 are those levels that you're looking on the upside. And on the way down, yesterday's low, which is 51,005, should be protected and should not come into view. For the Nifty, of course, it's last week's low that we had seen, but we've quickly put some distance. So I didn't mention that on the downside. The environment, the backdrop, once again this morning is, the global backdrop especially is a little better. Lots of earnings to react to, and will that take a bite? Will that bite? That's the question. The big one, Reliance at the margin, perhaps has not done all that well. Some of the seasonal slowdown or whatever. So we'll have to see. That's a big name and has an outsized influence on what the indices do. GIFT Nifty will come up on your screen. That's indicating a 18, 19-point higher start. Surabhi.
Oh, yeah, absolutely. Slightly mixed picture across Asia. The GIFT Nifty is picking on the markets that are doing well, which is, Japan's come back after a break. The Chinese markets and the Hong Kong markets, they are flashing a little bit of red at this point in time. Taiwan's doing better. So it's a fairly mixed picture. On oil, just to add to the point that Prashant made, that obviously geopolitics is top of mind, and that's why we're seeing prices do what they do. This drop of almost 3%. In addition, OPEC is saying the world will probably need lesser oil than it previously thought. So they've cut down the demand estimate, not just for this calendar year, but for the next one as well. So 2024, they were earlier on the expectations of 2 million barrels a day. Now it's 1.9. For 2025, it's come down from 1.7 to 1.6 million barrels a day. So generally, the anticipation is that there'll be lesser demand unless something major happens in China and that economy starts going into an overdrive. So that's on oil. Just to talk about, of course, the inflation picture here, since we're talking oil, and oil is clearly not the problem. It's not about fuel. It's not about the WPI, but the CPI numbers were uglier than what one had anticipated. That's the issue. The number came in at almost 5.5%, which is obviously above the RBI's comfort zone. And look at food inflation. I mean, month on month in September, it spiked to over 9%. And within that, look at vegetables. And these things, the RBI watches, the governor's made it a point to sort of talk about the importance of looking at food inflation and not ignoring it. Though, of course, economists do say this is probably transient and was expected to, show up in this way. But 36% vegetable inflation. So that's a bit of a negative. What is positive is the fund flow picture for the market, because the FPI selling intensity that has continued to decrease. And now after many, many days, we're looking at a net sell, but less than 4,000 crores. And domestic institutions obviously are providing the cushion on the other side. They didn't buy too much yesterday, but still about 2,200 crores. They continue to chip in there. So that's a good thing for the market, that the cash market FPI selling intensity is reducing. Coming to the earnings that Prashant spoke of, Reliance, well, it depends on how you cut it up, but the best thing in the numbers really has been Jio. Jio has sizzled away with an ARPU increase of over 7%. That ARPU number is now touching 195. The retail business has shown slightly soft trends. The revenue growth hasn't taken off for Reliance Retail that much. The oil and gas performance is better than expected, but if you see oil to chemicals, there's some pressure at the EBITDA line over there, and we'll talk more about it as we go forward. But net, I think that Jio headline is the one that the market will really want to run with. HCL Tech, another blockbuster show, and fantastic, because not only is the constant currency growth better than expectations at 1.6%, they've increased the guidance, at least the lower end of the guidance. The new band now is 3.5% to 5% versus 3 to 5% earlier. So we've got some positive cues coming in over there. And then, of course, lots of mid-cap earnings. We'll get to them as we go along. And let's not forget, today we get our biggest IPO ever, the newest biggest IPO. Hyundai opens out for subscriptions today. It's a big, big issue, right? And that's one of the concerns in the market, that as the company raises well over 27,800 crore rupees, and that liquidity will be mopped up. So could that put some near-term pressure or not? You'll hear a lot more about Hyundai as we go forward, but that's the big one to watch out for. Nigel.
Well, in terms of all the market cues that are stated, the crude oil price drop, that's something that's encouraging, right?
Yeah.
OPEC demand is lower, that's good. But I think what Prashant said, the de-escalation of tensions, that's good for the market, yes, but it's good for mankind as well. And you like to wake up to news like that. So the big cues that came in overnight was that crude oil prices are lower by close to around 3% odd. That somehow gets nullified because the dollar index is stronger. It's holding at around 103 odd. And, normally when you see the dollar index strengthening, it has an inverse relation with what happens with metals. So let's see whether or not metals comes in under pressure, because when it was weakening, we did see a good run on metal stocks as well. So we'll keep an eye out on that. Yesterday's trading session was good, actually. The Nifty Bank did outperform, and that was because there was a bit of a short covering bounce that did play out in yesterday's trading session. It appears the shorts were mostly covered on the Nifty Bank. Now, the FI positioning, well, they lightened their positions on both sides, long as well as on the short side. And now they continue to remain net short with close to around 65% of their positioning on the short side. In absolute terms, the FIs and the clients, well, they're on opposite ends of the spectrum. The FIs are net short, while the clients, well, they are net short at around 1.9 lakh contracts odd. But the Nifty Bank, that's the one that needs to drive us higher from here, because you're getting stability coming in from the IT index. But the Nifty Bank will have to drive us in higher. And yesterday was particularly a good session. I say that because we went to this mark, right, of around 51,500, 51,700 odd. But yesterday we managed to end closer to the high point of the day. On the previous occasions in the last week or so, well, we did see profit taking. So yesterday was a good session, and we ended at the highest point we have seen all the way since October 3rd. So good going out there. But the driver for the Nifty Bank was HDFC Bank. And in yesterday's trade, it's taken out the 50 DMA. Now it's very, very close to the 20 DMA. So in terms of a technical level, you wanted to get past that 1700 mark and you wanted to trade out there. if HDFC Bank can conquer that 20-day MA, it's conquered all the key technical levels, and then it could be good for more, which in turn helps the Nifty Bank as well as the Nifty as well. The other big index that we look out today is the Nifty Financial Services Index. It's a Tuesday, so it'll play out the weekly expiry. Reliance Industries, what do you do with that one? Remember, it's corrected close to around 14% odd, and Jefferies came out with a very interesting note. They say post this correction, well, it already has discounted the print, the weak print that we've seen in the past quarter. And they make this point on valuations. In the last 5 years, when the stock has traded at these valuations, investors normally make money. So we'll have to see whether or not that plays out yet again. So that's going to be the important stock to move as well. But on a technical basis, it needs to get past the 2,900 mark to be good for more. But fundamentally, things are looking up. Let's wind this down with the Nifty levels then. The recent high becomes a bit of a resistance. 25,250, 25,250 to around 25,300. That becomes a bit of a resistance mark, while you have your reference point on the down end at around that 24,700 mark. So let's see how things move from here.
All right, Nigel, thanks very much for that. So we'll keep an eye out on some of these stocks and, of course, talk about the sort of the drop in the oil price of oil as well. We have